Lululemon just reported their latest quarterly figures, and to be honest, it was a mixed bag. Now, the stock, not surprising, or maybe surprising for some, but the stock before the market opens is up 4% or so. Now, why is the stock up 4% when the quarter was really not that great of a quarter? It was a weakish quarter. Revenue missed, but they did beat on the profitability metrics. Now, for next quarter, they also missed guidance and the annual guidance as well. So yeah, mixed bag, but it does seem as if the stock might have bottomed. Sentiment was already pretty bad. I mean, the stock year to date is down close to 50%. So yeah, unlike other companies that we've covered in the last couple of weeks, sentiment around Lululemon has not been great at all. So maybe it was better than feared. Right now, if we look at some valuation metrics, I mean, the stock is really not that expensive. It's true that it's not growing as fast as before, but it is very, very profitable. Now, forward PE, 18.1 times, EV to EBITDA 10.9 times, price to sales 3 times, and price to free cash flow only 19.1 times. And then you have price earnings to growth sitting at 1.72. And don't forget, this is a company with industry leading gross margin, right? Gross profit margin sits at 59.6%. So yeah, it does deserve, let's say, a small premium compared to the other companies in this sector. Now, currently, the average analyst price target still sits at $334, but I did see already some analysts, reducing the price target by a little bit. So let's say it's around $300, still represents a nice little upside from the price we're at today. So now, before jumping into the earnings report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. It was a very, very long earnings season, very interesting one as well. Hopefully you found it extremely valuable. If you did, only hit those buttons, that's good enough. If you want to take it one step further, you want to support me even further, do check out the links down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with a major overview here. Total revenue grew 7% year over year, $2.4 billion. Diluted earnings per share increased 18% to $3.15. Total comparable sales only increased 3%. As for gross profit, gross margin, here you can see really how strong this company is. So gross profit increased 9% to $1.4 billion. Gross margin increased 80 basis points to 59.6%. Income from operation increased 13% to $540.2 million, and so operating margin increased another 110 basis points to 22.8%. Now, yes, you might say, okay, but revenue is decreasing. Okay, fine. But revenue is decreasing, margins keep on increasing. So if they really want to, let's say, increase revenue, accelerate revenue, and by the way, the problem with revenue is definitely Americas, not the other segments, because international, that grew 29%, Americas only 1%. But let's say they reduce the prices, which, okay, might be a bad sign, but that would definitely accelerate revenue. Of course, will hurt margins a little bit, but that could accelerate margins. More on that in just a second. The company also repurchased 1.9 million shares for a cost of $583.7 million. I believe share outstanding is also down 2% year over year. So overall, here you have basically the breakdown, the split. Comparable sales, net revenue. Americas comparable sales down 3% year over year. China mainland up 21%. Rest of the world up 17%. Total internationally up 19%. As for net revenue, United States basically flat. Canada is up 8%. So Americas only up 1%. But again, international up 29%, 34% increase in China mainland, and 24% increase in the rest of the world. So yeah, I mean, it's safe to say that internationally, they still have a long, long way to go. As for inventories at the end of the quarter, that decreased 14% to $1.4 billion compared to $1.7 billion same quarter last year. Here you can basically see throughout the last couple of years, shares outstanding have come down. I mean, it's not down 10, 20% or so, down 2, 3%, but it is coming down, so that's great. As for the outlook, like I said, for the third quarter and for the full year, it did miss. So here are the numbers. Net revenue will be in the range of $2.34 and $2.36 billion, representing 6 to 7% year-over-year growth. Diluted earnings per share to be in the range of $2.68 and $2.73. As for 2024, the company now expects net revenue to be in the range of $10.37 to $10.47 billion, representing growth of 8 to 9% or 6 to 7% excluding the 53rd week of 2024. Diluted earnings per share is expected to be in the range, let's call it midpoint, $14.05. Now, during the call, they did mention the following things. While we continue to see growth in our men's business, yes, for those that don't know, there is a men's side of Lululemon, by the way. I've tried some, didn't buy yet, but I've tried some of their pants, and I can tell you it's probably one of the best pants that I've tried out in the last couple of years. Not cheap, but goddamn, it's very, very comfortable. Anyways, we have experienced a slowdown in the women's segment. So not the men's business, but the women's segment. We have improved our in-stocks in smaller sizes through Q2 and entering Q3 better positions. As we analyze our women's business in more detail, we have determined the most significant factor was our product plan that introduced less newness across core and seasonal styles. By newness, I'm referring to the seasonal updates we bring into the assortment, typically expressed as color, print, patterns, and silhouettes. I'm not referring to our pipeline of innovation, which remains full and the details of which I will share with you shortly. For 2025, we are fast-tracking several new styles within performance shorts, tops, and tracksuits. We're optimistic that we will begin to see the benefits of these strategies over the upcoming quarters and return to our historical levels of newness no later than spring 2025. Moving forward, I feel confident that the new structure and relationship between design and merchandising will lead to more ongoing conversations. They did have a little restructuring in management, so let's see how that works out. Consistent decision making, and I'm excited about the newness and innovation that will be flowing into our upcoming product assortments. While we are disappointed with the recent performance in women's, we see many strengths in our US business. And so right now, looking at the graph, RSI is pretty low, not oversold anymore. It was oversold as a lot of stocks at the beginning of August. For the week, this is on the weekly candle was rejected here at the 50-day moving average, which sits at $275. Now, pre-market, we are sitting at $268.18. Let's see what happens when the market opens. Remember, whatever happens pre-market after hours can completely flip around when the market opens. The 20-day one sits at $259. That should now serve as a sort of support line. So overall, to conclude, I think it's pretty simple right now. Execution is key. The market is now maybe standing back and saying, look, show us what you've got. Gain our confidence back in the next coming quarters. I mean, yes, we've been talking about competition is coming, it's eating their lunch, etc., etc. I don't think that's necessarily true, because if it were true, then you would see international business slow down quite a lot. Yes, it's true. In the Americas, it's not growing that much. But overall, industry-leading margins. I think they still have long ways to go internationally. And from what I've been seeing online, the stores at Lululemon are mostly full from what I've seen, right? Me personally as well. When you walk into a Lululemon store, there's always a lot of folks in there. The competition, not that much. But okay, we'll see what happens in the future. By the way, you can also check it on Google Trends, the trends of Lululemon against the competition. Lululemon is still much higher than all the rest. So overall, that's about it. Not going to buy, not going to sell shares right now. That's just my opinion. Of course, do leave yours down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.